Wondering about what's going to happen in 2024 regarding the investment markets and the economy? Today I'm speaking with Lew Altfest, multiple-year recipient of the Barron's Top 100 Independent Financial Advisors in the U.S. Award, to get his expert outlook. From a quick overview of what happened in 2023 to what Altfest expects to happen in 2024 regarding interest rates, inflation, the economy, and the markets, from the likelihood of a recession to an overview of 3 key international markets, this video will give you the knowledge you need to start your investing year off right. Well, Lew, thank you very much for being with us today on Wealth Matters for Physicians.
Well, I'm looking forward to it.
Great. So today we're discussing the Altfest 2024 Economic and Market Outlook. So to start us off, could you give us an overview of what happened in 2023 regarding the economy and the markets?
Yeah, 2023 was a big surprise to many, many people. Everybody was expecting a recession, but a recession never came. Instead, we had growth which grew over the year, ending in a blast in the third quarter and the fourth quarter. People had money left over from not spending during COVID, and they are spending it. So that was great for the economy, and the stock market came back strongly. And it not only came back, well, it came back strongly overall. Mm-hmm. The stock market was a bit strange, a bit different, in which 8 companies or 7, called the Magnificent Seven, hit home runs. And the rest of the market didn't do badly, as it turned out, and had an actual rally in the fourth quarter, but was nowhere near like an average of 100% or more, I believe, in their securities. They got caught up in chat, and people just bought those large companies.
Mm-hmm. Based on the ChatGPT, right?
Yeah.
Okay. Thank you very much. So, Lew, what do you think will be happening with inflation and interest rates in 2024?
Inflation isn't going to go down. By the way, when you talk about projections, usually, this may sound strange, but consensus loses. Mm-hmm. So consensus lost last year, and you have to be very careful about consensus in the current year. Mm-hmm. But I'll say that the consensus figures for a material decline in inflation this year will not occur, that we may have a mild decline in inflation. Mm-hmm. And interest rates are not, is going to be more mild. There may be a modest decline in interest rates, but interest rates are fairly close to what we'll see in the new year. Now, there is a possibility of the economy really going into recession. But that possibility, which comes about because of a reflection of interest rates for long bonds and short-term bonds or rates, they get confused, and that confusion is a reflection of what can happen in the economy if it and bring about a recession. But I would say that recession is not really likely. It's like got a 1/3 chance of happening.
Okay. And if I know if we were been talking about recession also internally at Altfest, if we do go into recession, I mean, does anyone know? Would you think it would be a very severe recession? Could it be a light recession?
There's no real reason for a recession on from a fundamental standpoint. In the last recession that we had, there was a problem with real estate. There is no such problem now, and the figures, there are no real shortages that would jar the economy. So, but it's not going to be as robust as the second half of 23.
Okay. And I know that you've actually answered some of the questions I was going to ask you now, but I ask regarding your outlook on the economy and the markets. You've already touched on many things. Was there anything else that you would want our physician viewers to know, to be aware of regarding Altfest's outlook at the present time for the economy and the markets?
Well, I don't think it's going to be a gangbuster year. I think investments relative to history, their prices are they're not terrible, but they're off some. And I mean, they're above, the valuations are above what you might like, especially for these magnificent seven companies, which could, if there's any blemish in the thought process. By the way, many of them, for this great year that they had, they actually laid off people. So it wasn't a great year for them. It's only an expectation of a great year into the future.
Interesting. Thank you very much. Just wanted to take a few seconds to thank you for watching Wealth Matters for Physicians, the channel brought to you by Altfest Personal Wealth Management that provides physicians with key investing and personal financial planning strategies. For 40 years, physicians have relied on Altfest to help them achieve the financial independence and the future that they deserve. We are always honored to help you. Now back to our interview. So Lew, how have international markets done versus domestic markets relatively recently?
Are you ready for this?
Yes.
From 2008 to now, they have not done well at all. They've lagged the United States. The S&P 500, the benchmark that everybody uses now, is not has done particularly well, and these securities from international have not. The fundamental reason for that is that technology has taken off, and virtually all of technology until very recently has been in U.S. companies, and the U.S. has benefited.
Interesting, interesting. So is there...
I will say that in the last half of last year, U.S. and international did about the same.
Okay, good, very good to know. And I know that amongst our internal discussions with our multi-member investment management committee, we think there's one region of the world that we find the most attractive in the international markets. Which region is that?
That's the Far East. That's the developing markets in the Far East, plus Japan, which is in that category. They're just doing well. They're positioned to do well with the potential exception of one of those, China, but that's something that we can speak about.
Exactly. So let's get into that. So I know that you've identified three Asian countries that you think have very good long-term economic prospects and then therefore potential financial success over the long term. The first one that you wanted to talk about is Japan. What are you finding interesting about Japan right now?
Japan, do you know that Japan, in I think it was the late 1980s, had a gross a GDP, that's outlook per person, that for a small time period actually exceeded the United States. In other words, it was king of the hill at that time for that period of time. But they were not able to keep it up.
Right.
And instead, they kept their people inside the country happy, but they didn't develop things. They could only copy things. And they lost their mojo, you could say. And that took place for like whatever, 20,
Right, over 20 years.
Yeah. So at this point, the Japanese became concerned about China and their position in China, even though they trade, as we trade
Sure.
with China, but they decided that they have to do more. Their companies that were not earning money because they were giving the money in effect to and their loyalty to not their stockholders but to the administration, the president of the country. And now they see that they have to take a stand. They've committed themselves to the U.S. and they're starting their corporations, which were just playing it safe and kept a lot of money in cash. They have moved in another direction called, we have shareholders. We got to take care of them.
It's a big surprise.
Yes, a big surprise. And so they have bought back shares, they have engaged in acquisitions, and they're moving the country in a faster pace and taking some of the business away from China, which has helped their output.
Interesting, very, very interesting. And another country that you said is something to look into and keep an eye on, because of course it's an emerging economic power, is India. You know, what do you think about India right now?
India is an exciting story, which is likely to be the fastest growing large country in the world. And it has, for the first time, a prime minister who is really a smart man who has allowed people to take money and invest in the country, which the previous administrations have not. They were more into equalizing. They're doing something to help the country grow. Some story that I find amusing is reading about India and their country having highways like ours, and then finding that the cars on the highways have to stop and let the sheep, the cattle, other things to get across the road. Can you imagine that for the New York Thruway? Have a stop?
Exactly.
And,
Cows crossing, please stop.
Yeah, so I like that story. But now they're really developing their country, and the growth rates are exciting. But I must say, the stocks are high, and so we're not as excited about putting major dollars in that country.
But I know that one of the good things is that we are always reevaluating opportunities, and if we see the markets go down, particularly if we see the valuations of Indian stocks go down, that could be an opportunity for potentially to scoop some up at attractive prices in the future.
Right. That's exactly the thought process.
Excellent, excellent. And then the last country that we want to talk about, it's like on everyone's mind. You see it in the news all the time. Its economy has been doing very well. 2023, it was kind of sputtering as it was trying to get away from the 100% lockdown. What are Altfest's thoughts on the economic prospects of China?
So it's different. It's exactly the opposite in a way, in many ways, of India. Not that it's going to fall apart, but it's having its difficulties. One of the advantages of India is that it has people that are productive in the sense of giving birth and
population growth,
which helps to put more people over time in the working class
workforce,
and China is having fewer and fewer people, having fewer and fewer kids, and they have problems in real estate, which influence them for some time, and in which you bought a house and the house grew, and now it's not happening, and that's hurt things. On the other hand, what China has done since they cut a deal with the U.S. has been magnificent, and the Chinese people are hardworking and are interested in education, and from nowhere they've become technological competitors for the United States. The stocks this past year in particular have gone down so much that that China has the lowest valuation practically in the entire world, at least among major economies. And all it has to do is turn things around in the sense of showing some boost in the economy for the stock market to really take off. And the markets, as you say, are very cheap. There's one fellow, what's the name of the number one favorite company, the equivalent of Amazon? Alibaba, right. Slipped that one. And Alibaba's president and the fellow who's the owner of Alibaba have both been active purchasers recently. Maybe they're seeing something that the rest of the country should follow. So China is an interesting company. Over the next several years, good things are going to happen, particularly if they can keep just a balance with the U.S. in trade, that is, trade between the U.S. and China.
Excellent, excellent. Thank you very much. Well, that's all that we have for today regarding Altfest's 2024 market and economic outlook. Lew, thank you so much for being on the program today. I mean, we really appreciate it. We think you've given a great deal of practical, useful information for our physician audience that they can start using right now.
Well, that's good. As I started out saying, I was looking forward to it, and it was enjoyable.
Well, that just means we're going to have you again on the show in the relatively near future.
Okay, it's a deal.
Sounds good. If you'd like to discuss the information explained in today's video, receive a complimentary review of your investment portfolio, or a retirement readiness analysis, or discuss any other personal financial planning area with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732 or by emailing Jesse at his email address, which is also in the description of today's video. If you like today's video, please click the subscribe button below and hit the bell icon to receive notifications each time we release a new one. If you think that a fellow physician would find this video either helpful or interesting, please feel free to share it with him or her to help them strengthen their finances. Lastly, as always, if you have topics you'd like us to cover, have certain questions or dislike certain things that we're doing, or have any other feedback, we'd love to hear from you so we can make this content even better and more relevant to your lives. So please give us your comments in the comments section below. Well, that's all for now, physicians. Thank you very, very much for being with us in today's video, and I look forward to being with you in our next one. Until then, be well, and remember to keep on optimizing your finances, or let us help you if you'd like.